Hello, ladies and gentlemen. Good morning. Here with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting as usual with the North American markets and the outlooks from yesterday, the reports from yesterday. First, the Dow Jones went slightly up 4 points. NASDAQ went about 10 points down yesterday. The Dixie went down as well to 98.95 from 99.60. Retail sales, month on month, worse than expected. Producer price index as expected yesterday. Business inventories, contraction there by 0.1%. Retail sales excluding auto 0.3% month on month, worse than expected. PPI, month on month and year on year, better than expected and as expected. Redbud index, month on month and year on year, 1.1% lower than previous, 2.3% lower than previous. Business optimism index, 3.2 points worse than expected. For today, we have the NBA mortgage applications, capacity utilization, industrial production month on month, house market index, the net long-term tick flows, New York Empire State Manufacturing Index, capacity utilization, and we have a speech from the Fed's Bullard for today. The main events come from Canada. Rate statement, interest rate decision, monetary policy statement, followed by the usual press conference. This is going to be the most important thing from the North American markets today. European markets, the DAX went 60 points down yesterday. The CAC 40 ended up on a dodgy. Yesterday, the industrial production reports came better than expected and the euro rose, also supported by the weak US data. Today, we have CPI reports from Germany, which already came better than expected or as expected already. And we are waiting for the monetary policy statement, interest rate decision, and trade balance reports from the European zone. The G20 meeting is due to start and will also cover today and tomorrow. Moving along to the UK market, starting with the FTSE 100, which pretty much lost 5 points yesterday, closed at 7,029 points. Mixed to negative data from the calendar yesterday, filled with the inflation data, where the most volatility causing CPI and core CPI came out slightly negative, while the PPI reports came better or as anticipated. Having in mind that the inflation data was already well expected by the traders, the pound managed to gain back some points. The weak retail sales in the US also backed the sterling versus most of its counterparts. For example, the cable went about 100 points up yesterday with 200 points range. It is going sideways today. Couple of top 3 events today and none for tomorrow till Friday, when the calendar will give us information on the earnings reports, unemployment, and the climate count changes in Britain. Moving along to the Asian markets, a lot of data was poured from Asia yesterday and today as well. I will start by giving the reports from China, where we saw declines in the industrial production and GDP quarter on quarter, along with the year-on-year retail sales reports. The new loans reports came better than expected, and the year-on-year GDP came at 7%, which was the anticipated rate. The foreign direct investments reports is due tomorrow in China. In Japan, the Nikkei 225 has gained about 60 pips based on the overall negative reports on the industrial production. Also, the foreign investments reports are due today, so we're going to see most probably some volatility on the yen later on in the afternoon. Moving along to the Pacific markets, both Pacific currencies are in a continuation of their downtrends based on the China and in general the Asian reports in general. We are expecting reports from the labor market in Australia tomorrow, which most definitely will cause some fluctuations on the charts. Moving along to the commodities sector, the S&P 500 index had a range of 17 points at 2,087.50. Ended up yesterday. Gold had also a range of $18 trading at 11.94.18 currently. Silver had a range of about almost 40 cents at 16.22 now. The WTI crude had 1.70 range. Crude prices rose slightly yesterday on expectations. U.S. shale oil output will record its first monthly decline in over 4 years, but analysts warn that the broader market remained oversupplied as China's exports are on the rose again. That would underscore how record crude output from the U.S. shale boom might be backtracking after global markets saw prices effectively slashed by half since June on oversupply and lackluster demand. However, we will remain neutral ahead of the EIA stockpile reports tomorrow. Natural gas is trading at $2.24 per British thermal unit. And at the moment, the range was 0.4 cents yesterday. That is all from me for today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.